Yes, sir. The presentation has gone live.
Yep. Very, very good evening, everyone, and a very warm welcome from my personal side to all the members, both from the industry as well as service who have joined this webinar. Let me clarify right at the beginning that this webinar is not just about discussing any other management topic, but it's to explore how we as professionals can help build future ready organizations that are ready to balance profit with purpose, growth with sustainability, and build the organizations that are responsible and resilient. One thing we can't forget, to be future ready, an organization must place sustainability at its core. And therefore, sustainability today is not an obligation, but it's the basic strategic anchor. Profitability deals with uh, financial perspective, driving value creation for the shareholders, whereas purpose is strategic perspective. It's always rooted in the vision, mission, and values of an organization that guides them over a longer term. Sustainability, on the other hand, represents existential perspective, which ensures that the organization's continuity and relevance is maintained. So organizations that will thrive tomorrow are those that see sustainability as uh, a commitment to the community, and they don't look at it as a part of cost. Let's look today at some of the imperatives that will help prepare us CMAs for this 20th century, 21st century warfare. I really call it as a warfare. Let's first deal with agenda. Why is future readiness matter for us, for CMAs? So I'm going to take you through some of the reimagination of our relevance in the coming period. I'll then take you through some of the key pillars, key building blocks of making future ready organizations through some real world insights. And then how do we evolve ourselves as CMA 4.0 uh, beyond numbers? So that is what I have uh, planned to be covered during today. First of all, what I feel is we must start calling ourselves as management accountants, giving us a role with a broader perspective. My dear friends, cost accounting is done and dusted in the right sense, in the positive sense. We have been doing it over last 5, 6 decades and doing it very, very successfully. The country has recognized it, no doubt. Cost audit, internal audit, GST are, are thrust areas, but they are only compliance oriented. Now is the time for us to build skills and capabilities of being able to offer a 360-degree advice to our clients, to the companies with which members in the industry may be working. And therefore, it's not out of the place for me to mention here that we all must recalibrate our skills and build our expertise based on that. Why do we call it a sustainable growth? Simple reason is, of course, unsustainable growth is already taken by our history. If we look at the process of industrialization over the last 2 centuries, it's all unsustainable growth that has happened. Many organizations have grown definitely rapidly, tremendously, but without any responsibility. They extracted, they expanded, and they excelled, but, but it's at the cost of environment. It's at the cost of ethics, at the cost of equity. Is the kind of a growth that we achieved was without conscience. That may look great, but only for a brief period of time. That's the kind of growth that rarely survives through generations. Sustainable growth, remind you, is not just about its speed or size, but it's about staying relevant, staying in power, respecting the limits of the ecosystem, limits of the society, and of course of the human values. Companies which chase the growth and profitability coupled with lowering costs, and we were one of the contributors to that uh, value system, but they ignored labor conditions, they ignored wastage. There's therefore, over a period of time, a backlash that has come into us in the form of regulatory actions, loss of brand, loss of trust, and also erosion of the markets. Take example of fossil fuel based corporate giants all over the world. They grew massively, but they're now pivoting towards renewables and low carbon technologies. Financial institutions even, they ignored governance, they ignored ethics. The results? Collapses, regulations, mistrust, and the legacy. That's actually the legacy of unsustainable growth. So we should ask ourselves a question today: are we actually ready to face the future instead of fearing it? Let's prepare ourselves for that. Why does it matter now? As I say, time is already running out. If we try to understand what's the future readiness, it's nothing but to develop an ability to anticipate and adapt to future changes by being strategically prepared for these shifts, transformations, technological advances, and evolving customer expectations. So let's look at three important ingredients which I relate the importance of future ready organizations. One is to do with the current trends, both domestically in India as well as globally. And these trends can be easily seen through the actions taken in terms of development of the sustainable sustainability developmental goals, UN SDGs, the environmental, social, and governance parameters developed all over the world, and integrated reporting, which also now has a regulatory push. And it has come basically from stakeholder expectations. Well, if you want to ignore it, at your own peril. Risks of ignoring are already being felt. There are reputational risks, there are regulatory compliance-oriented risks, and there are financial risks, which will question the very existence of organizations unless they act now. And that's why it matters now. Organizations that will take care of such things today will certainly benefit. And I'll talk about a couple of benefits today in terms of access to capital and market preferences. So if you take yourself to the nomenclature that's normally used in airline industry, headwinds and tailwinds. Preparing future ready organizations, my friends, is like tackling headwinds today. Global investors are today asking for ESG related scores. I was just going through a Morgan Stanley report, which was based on analysis of Morningstar data, where global sustainable investment funds have assets under management to the tune of $3.56 billion as at the end of 2024. So just about 11 months ago. And this is despite facing the headwinds. And therefore, the ESG scores has become the need of the hour. And it's a demand from global investors. Like what we had since about 3-4 decades, the credit rating agencies in India, like CRISIL or ICRA, they have now graduated themselves to ESG scoring of companies. There are new companies on the horizon, like ESG Risk.ai or ESG SES organization, which is Sustainability Empowerment Services. And the various parameters on which such ESG scores are given include, among others, of course, the parameters like what they are stated in the 6 types of capital in the integrated reporting and the national guidelines for responsible business conduct, which actually resulted into creation of BRSR report, as you all know, covering principles like integrity, employee well-being, human rights, environmental protection, of course, etc. So therefore, now what we need to look at is the aspects which we can't ignore, because ignoring sustainability is equivalent to ignoring risk management. And as I've said, it will erode trust, value, and long-term competitiveness. So actually, it's like on a cigarette packet, there is a health warning. So here I've put it as a warning that ignoring ESG is injurious to corporate health. Well, greenwashing today was tried by the companies that wanted to exhibit their existence and their proactiveness in preparing for tomorrow's organizations. They went overboard and they started greenwashing tactics. That is nothing but making false claims about sustainability. If you remember, I can give some examples here. Volkswagen, they fitted defective devices that cheated on emission tests. British Petroleum, the deep water oil spill that you may be aware, or Foxconn, that was a vendor to Apple. They had poor and unhealthy working conditions. Nike made use of child labor. Meta, one of the biggest organizations, there were issues related to data privacy, governance failures. So what I meant to see is, for all of us to see is, yes, there are risks which are related to reputation, related to regulatory in terms of taxes, fines, penalties, and financial risks as well, because investors are not going to condone you for mistakes that you make. The cost of capital will rise, or even some of the investors will disinvest from your organizations, making it very difficult for you to raise money for your own projects. And of course, I mean, supply chain disruptions are there to always come and haunt you. So investors, as I said, is a category of stakeholders that always look for opportunities for funding organizations based on whether they're integrating sustainability. The access to capital in terms of, if you take Indian numbers, 2024 numbers I have today, Nearly $50 billion green bonds have been issued by organizations. Companies like KPI Green Energy, Adani Energy, L&T, Tata Cleantech, Yes Bank, Rural Electrification Corporation. All these are the names. Those companies raised green bonds, which are nothing but sustainability linked loans. In fact, many of the finance providers, banks, financial corporations, they have started in building a term and condition in the loan agreement where they link sustainability linked performance parameters. Otherwise, if they're not met, they're likely to charge penal interests. So such terms and conditions are getting built into the loan agreements. Now, these companies which are sort of future ready, that means sustainability embracing organizations, they're preferred by customers also, and the other value chain partners like vendors. If you take example for of the FMCG sector, ITC, they're using paperboards and packaging division to focus on recyclable and biodegradable materials. And that is getting a very, very strong retailer preference nowadays. Nestle, for example, transitioning to 100% recyclable or reusable packaging. And that is what they officially announced that they would achieve it by the end of this year, that is 2025. Hindustan Lever, they use water positive and plastic neutral strategies in manufacturing. Even you look at all the auto sector companies that manufacture EVs, they're transforming towards carbon reduction. Now, what is the relevance of all these for CMAs? Look, we know the traditional way of computing costs, controlling costs, even reducing costs. We spoke a lot about value engineering, value addition, etc. in the past. But the way in which the costs are getting tracked and traced is undergoing tremendous change. This is what organizations do not even know. They don't know where are the costs coming from, where is the money going, where are the wastages, where are the inefficiencies within the ecosystem of organizations. That's exactly where we have to step in. If we build ourselves as a navigator, as an architect of telling them where are those things that are getting lost, and help them tracking and tracing these costs, we will help them building a very future ready type of an organization. So let's see some of the key pillars which are like new horizons for all of us. If I try to unlock them, let's talk about our profession. And I perceive our profession as purpose-led. You know, our tagline, which always says, behind every successful business decision, there is a cost accountant. Friends, time has already come to redefine that tagline. It's a CMA 4.0 that is in the offing. We are not behind the decisions, we are making decisions. That's the kind of transition, that's the kind of transformation that our profession requires. So we will have to be purpose-led, not behind the screen. We have to be data-driven, ethically governed, and sustainability aligned. These are not theoretical fads that I'm talking about. See, the very existence of our profession depends on our ability to manage data. Whichever organizations you work for or whichever clients you work for, it's always the data that's important. So naturally, we therefore should be able to grasp that and influence the integrated thinking in the organization. We may, in our journey, need to collaborate with other teams for this purpose. These are the key pillars where we must look for our transformation. So the pillars, as I have selected today specifically for this webinar, are these five. First is, of course, the strategic purpose. CMAs that will have to link themselves with ESG. And our institute is doing a yeoman's work in this respect. A lot of sustainability related seminars and webinars are being organized. What's required, however, is for us to inbuild that, imbibe that in our practice and our, services. We have been very good at performance measurement. That was CMA 2.0, performance measurement. But from 2.0, now we have to move on and include, incorporate non-financial performance measures. Well, we have to do our job as compliance requirement also. So all the financial performance parameters that are inbuilt into financial statements, into our cost records, into cost audit reports, etc., that's fine. But we need to look beyond all that we are legally required to do and look for non-financial performance parameters. I'll give some examples thereof a little later. And then we must exhibit our ability to work for ethical governance and also the leadership. If we exhibit that ourselves, things will definitely become much better for not only for our profession, but also for the entire industry sector as such, be it manufacturing, be it service, be it any future industry. While all of this is fine, can we today ignore AI? And the answer, of course, is no. I do not know how many of us actually make use of this, but there is tremendous amount of data. I told you we have to be data driven. Data is available on the net. What we don't know is how to extract it and where to extract it from and what to do with it. If you have right questions in your mind, there are more than enough tools available on artificial intelligence. If given a choice to me, I will not have two assistants with me. Rather, I have couple of AI tools with me who will just generate, analyze the information and present it before me like nobody else would do. So AI, naturally, simple tools, even you make use of Gemini, you make use of ChatGPT, you make use of Perplexity. All these have capabilities that can do wonderful things for you. And there will not be any official certifications or courses. That's not what is required. What is required is install those tools on your laptops. Just try them out. Nothing can go wrong. Only practice will make all of us perfect. So let's start talking about strategy and purpose. As I said, purpose-driven strategy that correlates with resilience and therefore performance. So for my friends working in the industry, look if the company is integrating sustainability into its strategic model, into its designing of KPIs, linking profit with purpose. Your internal reporting systems, you must have a look at and check if this is happening. If not, then you should be able to act as a mediator and influence the decision makers in your organization to build a system like that. Similarly, members in practice, they should be able to, talk to the clients, hold workshops for them on how do they align business purpose with the ESG kind of objectives. If you look at the example of Tata Group, we all know it's a very, very old organization, but they have a leadership with a legacy of purpose. And they say it is mentioned in the purpose, organizational purpose, improvement of quality of life of the communities that they serve. Now, this is a purpose. Now, the purpose can be serviced not only by achieving profit, but it will be reflected into Tata Group's strategies, right from Tata Steel to Tata Power to Tata, Auto, etc., etc. Resilience and performance. These are the keywords. And that's what enables them to even venture out in the fields which they haven't done done as such even today. They've gone into software, they have gone into hospitality with ease. And this is the first sign of a future-ready organization. So, strategy and purpose. Management accounting. I said some time back that we must start calling ourselves as management accountants. And naturally, we should have a linkage with ESG. Ask a question to yourself, whether you work in the industry or you practice. Are the companies you are engaged with having cost systems that now can integrate environmental and social dimensions in their ecosystem? Do they have cost codes for environmental and social type of expenditures? Well, they will have their basic codes as material, labor, overhead, etc. That's fine. But do they have subcodes where they can track and trace the costs which are related to these two parameters? Do they have the capability of building ESG dashboards? So if the answer to this is yes, members in practice can take up ESG cost system audits, advise them on carbon costing, and even we all are quite professional so far as capital expenditure, investment appraisal is concerned. But let us now start advising them on green investments, how those parameters would be built within our entire system of working. AI collected data can help you to link cost to the cost centers for energy, water, emissions, etc. Automate the process of variance analysis between finance only and triple cost. Profit, people, and planet. Unilever is doing that. They have environmental profit and loss accounting. It's not only a question that is academic anymore. It's actually being used. Toyota adopts carbon cost accounting. They use internal eco cost accounting, which assigns cost per ton of CO2 produced, emitted in manufacturing as well as logistics. So at least these organizations have gone ahead and started work on at least scope 1 related environmental issues. I'll talk about scope 1, scope 2, and scope 3 a little afterwards. But these are some things which members in the industry as well as members in practice need to have a closer look at in order to become an architect of future-ready organizations. I spoke about non-financial parameters, that the third pillar which I want to focus on. Financial performance is an outcome. We keep slicing and dicing ratios, numbers, we keep talking trend analysis, graphs, charts, pivots, everything that we do, but we don't focus on causes. Friends, there's a need for us to align this MIS to non-financial performance parameters. You can make use of integrated reporting framework for that purpose. 6 types of capital: manufactured capital, natural capital, human resource capital, etc., etc. There are 6. So a lot of performance parameters can be borrowed. And in fact, there is a whole set of documents which I will advise all of you to go through, is the Sustainability Accounting Standard Board, which has come up with the reporting parameters for 77 different industries, and these are global standards. These can be freely downloaded on the website of SASB. That will help you build the performance parameters of non-financial nature. And that's something which we need to work to go beyond financial numbers if we want to build organizations that are future ready. Members in practice especially would be able to benchmark the disclosure practices of their clients with competitors, with different types of companies. ESG data trail is one of the potential areas of designing the audit systems. This is over and above the cost audit that we already are carrying out. And once you build that, you can use this cost management data to demonstrate the linkages between efficiency, sustainability, efficiency, wastage, and sustainability. So non-financial parameters are really is rather an area where I think we need to work a lot. So can we look at some of the examples of these non-financial parameters? And this could be there in any functional domain of an organization. But let us today talk about some of the non-financial performance parameters related to environment. They measure organizations' environmental impact. Every organization publishes either in the director's report or future outlook and analysis report, that's a part of annual report, that talk about their goals. We can help them track progress vis-a-vis those goals. And we can make use of the data that can be easily tracked. See, tracking data today doesn't involve any manual work at all. There are tools available to capture these data because most of the machines have sensors, and through sensors, real-time online data can be tracked. So if you look at energy per se, you can develop a metric like total energy consumed in terms of kilowatt, percentage of renewable energy used therein. Energy intensity is a parameter which measures, kilowatt hours per unit of output. Now, if you want to track this metric, you must be able to link the quantitative data with our cost records to find out the true cost of energy. Both need to go hand in hand. Same is like emissions, greenhouse gas emissions. Here I have mentioned the scope 1, 2, 3. Scope 1 is nothing but direct emissions caused by the manufacturing activity of the organizations within direct control of them. Scope 2 talks about indirect energy emissions, which is like electricity purchased from the electricity boards. Whatever emissions are caused in the process of electricity production by that electricity board, obviously, is scope 2. And scope 3 are related to, of course, indirect value chain emissions caused by the vendors and other partners in the supply chain. It's very difficult to track scope 2 and 3 today, but at least we should be able to develop metric for scope 1 emissions. Measure the emission intensity per revenue, per rupee of revenue, or per output, cost of carbon for carbon price that is applied. And here, AI tools can definitely automate the data capturing from our energy bills, because energy bills are now coming in soft form. We can easily trace and track that record. Same are the examples that are related to water, wastages, and materials. Regardless of the sector in which you work, now here one may think that all these examples are necessarily related to manufacturing companies only. That's not the case. You can make use of similar and develop similar KPIs for even service industry, companies engaged in banking, financial services, IT, any hospitality, healthcare, any kind of services. The non-financial performance matters with the help of AI can be developed, can be traced and tracked online real time, and then integrate it with our cost systems that are used. Wastages, for example, the recycling, reusing, recovered material, pretty useful. You consider, the packaging industry, you consider FMCG companies, the packing material that is used. How many of them do you think use, environment-friendly material? Hardly, very few today. But if the consumer movement in India catches momentum, soon these products will find entry very, very difficult in the market. So you need to talk about percentage of material that you have consumed, you're recycling, or the percentage of your material cost wherein you are using sustainable material. Now, if you don't count it today, take it from me, tomorrow it will be a mandated performance parameter. The government is going to put pressures on the companies and make a mandate that you must do it. Don't forget, doing it as a part of compliance is never with the real strategic purpose. Once we are able to use it with strategic purpose, a step in the right direction is already on the horizon. And that is where we as CMAs can definitely, do a lot for converting today's organizations into future ready. Social metrics, like I showed the non-financial parameters or for environmental metrics, here are social, workforce related, health and safety related, community as such. Now, when we talk about social impact metrics, we just can, top of the mind recall is CSR. But there are things, many, many things much beyond that. Make use of these for the purpose of measuring the organization's future readiness with regard to the social metrics. And that will show commitment towards ESG. It's not only about, traditionally we know, okay, employee turnover rate. Go beyond that. Percentage of workforce that you upskilled in digital and sustainability domains. We have never been capturing this kind of a data. So what money you have spent in training and building skills that are digital, building skills that are green in nature. And I'm going to talk something about green skills in some time. So HR analytics can be linked with your workforce productivity metrics. That's what can help us. Time lost due to injuries, fatalities, safety incidents, safety training cost per employee. Now, these are only focused in terms of costs. We don't build them into, the social or societal metrics as such. How many times it has come to light that such instances, such incidents have been shoved under the carpet, and the company still boasts about its social commitment. We need to look at their systems even in this regard and try and make them aware of what they need to do, and first of all, why do they need to do that. Customer and product related metrics. So far as societal, are we producing socially responsible products? Do we employ socially responsible processes? Do we train our consumers to become socially responsible consumers as an organization? I mean, it's one thing to say that yes, 2% of our profit we spend on CSR. But it's another thing to say that yes, we work for our customers in developing them so that they consume the products in the socially responsible manner. So bring in your marketing messages, bring in your R&D related researches and work, and bring in overall ethics within cost management. So cost management today is not a number driven function. It is much to go beyond that all. So definitely embracing environmental and societal metrics. Unfortunately, nothing of this sort gets reported as a part of regular board level dashboards. It is our field, my dear friends. We can make it happen if we decide, of course, and if we upskill ourselves in this particular regard. Governance related NFPIs, non-financial performance indicators. Are the organizations transparent? Well, they may be complying because if law says you have to have an audit committee, they will have an audit committee. Law says you have cost audit done, they will have cost audit done. So compliance, I don't think there is much awareness that needs to be created. But what's required is the first and the third point that I mentioned on the left-hand side of the slide: transparency and stakeholder trust. Building it is difficult. It has to be within the blood streams of the organization, all the functional domains driven by the top. And therefore, board and ethics is one area where you could track, for example, the percentage of independent directors. Within that, maybe percentage of independent directors coming from different functionalities. Cases of code of conduct violations, the resolution of the whistleblower cases. Everything gets reported as a story, but is it tracked properly as a key performance indicator? Today, it's all voluntary. I'm not at all saying that this has to be done with a view of complying a certain law or a statute. No, not at all. But if a company, if organizations start building these systems, they will naturally be ready for what's likely to come their way in the future period of time. Very well. So integrate your dashboards, normal dashboards, with dashboards showing non-financial performances. Risk management, there are paras and paras, ACEs written you will find in the annual reports. But are we scoring it? Are we reporting the scores? Percentage of the SBUs with risk mitigation plans. Cybersecurity is one of the major risks that organizations face today. What sort of performance can be reported in terms of number of incidents that happen, number of incidents that get averted, and number of incidents that get resolved? Do we include these costs? These are all notional costs, I understand, but do we include them as a part of our cost dashboard today? If no, we need to build our capabilities to do that. Timeliness and accuracy of disclosures. Just because law permits 180 days, that 180 days, if we take, I mean, the purpose itself gets lost. The data is too old. The next very minute, forget about 180 days. Many of these reporting parameters, they do not come under any of the external assurance today. But tomorrow it could start. And in fact, some of the companies, leading organizations in India, you can see their annual reports, they're getting their integrated reports voluntarily assured by a third party, external party. So they have graduated to the level of being able to set out the performance parameters, track the performance, track the progress, and then base their strategies, which will only improve those parameters in the future period of time. They do create measurable links to audit the cost saving as well as the credibility of the transparency and the reporting that they use. Ethics as well as AI related data governance. So when you're using AI, there is every danger inbuilt in that about confirmation biases. Have you got the systems of testing those confirmation biases? AI-based decisions that are subject to human oversight. 10 days ago, there's a huge case that's going on. While there are a number of cases going on, there is one very notable case you might have read in the press, and that's about Deloitte company, which had to pay $500,000 penalty to the Australian government for having issued AI-based report, which included errors. Deloitte admitted the errors. They said, hey, it was a human oversight miss, which caused the report to go wrong. So while AI is pretty useful, and we must use it, no doubt about it, there's no choice, we need to be very sure of accuracy thereof. And these are the new dimensions in the business models. We know very well, friends, that journey of cost accountants mirrors the journey of changes in the business itself. Every time, therefore, the business rules change, we need to come up and recalibrate our skills to be able to service the business well. Ethical governance. It's doing what is right, even when no one is watching you. You know, even you say, "Kanun ke haath lambe hai," but कानून watch नहीं कर रहा है. Law is not watching you, but you're still ethical because integrity is going to be foundation of your organizational trust. So those who are working in the industry, they may look to contribute to strengthening of governance procedures which revolve around use of AI and also work towards ESG. The basic work that we need to provide them or facilitate the companies doing is capturing the data, ensuring the accuracy thereof, and leaving behind enough audit trails, enough whistleblowing mechanism that works in the organization. May sound theoretical because there are cases of whistleblower being penalized, and there will continue to be cases even in the future. But these cases are few and far between compared to the total volume of the business done by all companies put together. So if you're practicing, you could evaluate the maturity levels of the governance practices used in your client's organization. When in doubt, you could flag for review the tactics that you may feel that the companies are using to do greenwashing, or there are some weak data controls. Many of our members, do a lot of internal audit work. So this falls in that category, identifying weaknesses in the internal control systems. And one of the areas in which these control systems are generally weak is the data controls. Physical controls, many companies are okay, I would say, but with data controls, it is a very, very problematic kind of a thing that I would say. So ethical governance must be embedded to ensure stakeholder value and also ethical insight into use of AI. The last of the pillar is artificial intelligence, which enhances human performance undoubtedly. Tracking, analytics, and reporting accurately is the name of the game. So if you're implementing AI-based cost analytics within your company or ESG data integration tools, first of all, you must make yourself aware of what those tools are, how do they work, what kind of confirmation or biases, other biases that those tools may have. Because again, using AI tools correctly would depend on what questions you ask the AI tool. If you ask wrong questions, you're going to get wrong answers. So many times what happens is you ask a question for an answer that is already there in your mind. Here the AI will not help you. Whether it is related to pricing, whether it is related to transfer pricing, whether it is related to cost decisions like making use of life cycle costs, making use of target costs. AI definitely is going to help you, but you need to ask the right questions. So developing the right question prompts is a skill which we need to make use of ourselves straight up. Practicing CMS, apart from imbibing the AI related knowledge within themselves, they can advise companies on how AI can be used in the ethical manner, how to build the data governance practices. What are the best practices in the world? They may not know, especially MSMEs and other companies may not even know. We need to bring them. Luckily, what I am saying today is you don't have to employ a very big size team to get this data done. AI can help you. Of course, you need human oversight. You can also advise how the digital processes can be audited. And these are the things which I'm sure will help you reorient yourself, reorient your professionalism in a way that you can be an architect towards developing future ready organizations. And therefore, towards that, we need to build CMO 4.0 mindset, need to evolve beyond numbers. Put in terms of an equation, I just simply put it as a future ready CM. See, future ready organizations will require future ready CMAs. And future ready CMAs are nothing but strategic thinkers plus data translators plus ethical stewards. And that's definitely what's required. The CMA team, for example, can redesign the cost structure of the company using maybe life cycle costing, revealing that greener materials can reduce life cycle cost. There may be high upfront costs. So a traditional way to look at a capital expenditure appraisal may say, hey, the initial costs are too heavy, payback is too longer. But if using that environmental friendly green materials can help build reduce life cycle costs, nothing like it. And in the auto component manufacturing companies, cost reductions are always achieved using sourcing cheaper material to minimize or also doing a lot of value engineering to minimize your labor costs. But in the long run, you would always see this leading to quality issues. And on the other hand, even the higher warranty claims. The company, therefore, needs to shift focus to optimizing value rather than optimizing cost. Are you aware of investments that the companies, especially in auto sector, are making in digital twins? It's like cloning, which helps predictive maintenance tools, improve design efficiency, and reduce number of defects. Upfront cost is high, no doubt, but the total value for product raised through product reliability, brand reputation, and of course, customer retention, that is significantly increased. See, we should not look at cost as a year-to-year expenditure that goes to the profit and loss account, but we must look at, therefore, the models like life cycle costs. Using AI-driven dashboards, you will be able to identify real-time cost inefficiencies, link it to the use of probably maybe energy costs. And if you can bring linkage between operational data into sustainability, that is what future organizations will always be looking forward to. So that is really critical for us to keep in mind when we are trying to graduate from our existing levels to the levels that will be coming in future period of time. So strategic shift is required for future ready organizations in terms of a transformation from cost control to value creation. Move beyond cost reduction, as I said, to value optimization. Tools like scenario building, and these are all there in AI-aided softwares, modules, tools. You can help boards to evaluate the trade-offs between short-term profits, margins, long-term ESG-related value that tomorrow's organizations are going to create for themselves and for the society as a whole. Mind you, cost reduction will cut down your expense, but value optimization will build competitive advantage and will build future value for your organization. If you talk about digitizing and integrating its advantages with the use of AI, there's a move we are talking about shifting away from spreadsheets to smart analytics. Companies I know have implemented the best of the integrated software systems. Ultimately, what people do is download the results all into Excel and publish their reports. So that's not how future ready organizations would want to work. Using Excel is no longer a unique competency that we can boast of. So what we need to become, therefore, is a data strategist who will use the raw data analytics by the help of AI tools and convert it into a managerial insight. And that will foolproof the decisions that we are going to make. So we are at the forefront, not in the background, if we develop skills to use AI. And AI definitely can therefore be used for predictive type of cost analytics, not what happened last year. It can help you detect anomalies in the costing trends. It can help you automate the data creation. So the action that you need to create for yourselves or your peers, your friends, your clients, if you're practicing, is to build AI literacy. Partner with IT teams, partner with data teams, be aware of the new developments of what can happen and what is happening within our profession, so far as the global practices are concerned. People are already building capabilities. The audit firms, why they become the big four, why they become the big size that they are, because they have the ability to audit even algorithms. Algorithms can be audited for biases, for transparency, etc. And there are tools that can help you. Now, these are young generation, Gen Z kind of roles that CMAs need to be playing in future. Let's not just say, okay, we are already we are already a certain way in our careers, certain stage of our careers. Why should we develop these? Well, you are not doing it for yourself. You are doing it for your own people, and you're doing it for your own clients. So it's not a personal thought. It's a thought that has to be shifted to create next generations. So let's not use spreadsheets to record past. We need to start predicting future with the use of help of smart analytics. I highlighted already for you, move away from just tracking financial performances, financial metrics. And I gave you examples of non-financial performance measures. You need to champion integrated reporting. The reporting on using natural capital, human capital, intellectual capital, societal capital, and manufactured capital. Look at companies who are using IR framework today, integrated reporting framework. What sort of KPIs they are monitoring? How can that be bettered? And how it can help companies down the line to, in the entire value chain of vendors, customers, etc., to boost performance and create value for the community. Well, I mean, we can talk in terms of using balanced scorecard, but the balanced scorecard in its traditional framework format is outdated now. But you can still build your own balance scorecards, which suits your own organization or organizations that you serve as your clients. Multi-capital KPIs you could be making. And therefore, whenever you are trying to look at existing organizations, look whether they have embedded environmental and societal cost centers into their cost records, into their MISs. See, I'm pretty sure that if a performance is moving beyond profit and going towards purpose, the organization is truly beginning to grow sustainably. Then you don't have to worry much about a longer term perspective that the organizations need to take. Everything boils down ultimately to ethics. Ethical stewardship is a quality that we as CMAs must reflect. Let's move away. See, compliance is giving us our bread and butter. It's a daily living that we are getting out of it. So compliance is done and dusted, as I said in the beginning. That will continue as our daily bread and butter. But if we move towards ethical stewardship, we have enormous opportunities of growth, growing our profession, branding our profession that way. I would say branding our profession is important. So one can act as an ethical custodian that ensures transparency. Auditability is a quality, not just be satisfied that yes, there is a system and here how it's worked. There has to be audit trail for everything. And if we ensure that there is a stakeholder trust, I'm not talking about only shareholders, there's a trust that will be developed in the minds of every stakeholders, right from fund providers. They will believe that you may be given funds and that too at a lower cost. Vendors will be, interested, keen to supply to you. Customers will back you so far as your brand is concerned. So you can adopt tools like governance maturity frameworks. There are available. If you just Google it, you will find a lot of governance maturity frameworks that are ethical risk assessments, data integrity audits. All these tools are available today. Only thing that we need to do is to make a choice, use one or two of them, and imbibe them in organizational systems. We should be able to guide, consult, and even if it comes to that, train the boards in management of ESG related risks, in prevention of greenwashing tactics that middle and lower management may be using, and also conform with AI ethics. So dear friends, compliance will keep you lawful, no doubt about it. But ethical governance is something that will make you trustworthy. Ethics is not a procedural thing. It's a culture of the organization. So critical, very, very critical. Continuous learning. Back to school. We are technical expert in our domain, no doubt about that. Nobody can, be expert in cost and management accounting as our professionals are. But we need to shift the focus to a certain extent, at least, to interdisciplinary leadership. I feel very happy when I see many of our younger members are part of the company-wide projects that are working to create value optimization, projects that are related to board level governance related matters. feel very, very happy. And that's what we should continue, keep doing it. Collaborate across functional domains, across needs of the day, like sustainability, technology. These are the two things without which no future ready organization can work. And mark my words, sustainability and technology are the skills, green skills, I would say, that we must imbibe. At the institute level, yes, I mean, the curriculum is, shifting a bit to incorporate these two things. But then we need to assess the students in the way that they can be made ready to face the real world. Cross-functional task forces, professional upskilling, so far as sustainability, funding, data analytics. So one could partner with academic and professional bodies to co-create the future skill standards for us. And that will ensure our future readiness as CMAs. Because as I said right in the beginning, future ready organizations will require future ready CMAs. Future is not predicted. It's got to be created, and that's what we need to keep in mind. Ask ourselves these questions. Are we measuring performance or trying to shape it? Do our cost systems reflect cost to society and also to the planet, or cost of production only? What's legacy will today's management accountants leave for tomorrow's stakeholders of the organization? These are the questions that we need to ask ourselves. And to be able to become a future ready CMA, let's look at some of the areas where we can acquire green skills. Skills that will help us to balance short and long-term goals, to be more agile, to be flexible, responsible, and adaptable. Build technology and innovation as a core business function in our practice as a professional, not just supporting. That's what I said. It's not behind every successful business decision there is a CMA. It's a decision that CMA is influencing. So let's shift from behind the curtains to the forefront. We require definitely digitally literate future CMAs who stay ahead in competition and who have the ability to be the change. And that will ensure overall stakeholder alignment and sustainability. So the message that I want to take to you throughout whatever I have said so far in these 1.5 hours is to understand what's happening, keeping our eyes and ears open. Don't just be happy with what you're doing today, because that, as I said, will ensure your bread and butter. What are you going to leave the future generations with? If you want organizations to be future ready, you can be the navigator, you can be the architect, and you can be the facilitator. That is my take. So that's what I wanted to talk to you today on the topic of creating future ready organizations. So that's it from my side. If there are questions, I am ready to take the questions.
Thank you, sir. Let me check if there are some questions. No, sir, there are no questions. Just that somebody was saying that the sound is less. So after that, she has arranged, it seems. The sound was okay. It was not from the institute.
Okay.
So maybe from her own system, it could have been a problem.
Yeah.
Other than that, there are no questions, sir.
Okay.
So it has been a great talk, sir. I'm sure the number of attendees who had joined us at this webinar, they have definitely benefited from your beautiful presentation, sir. And so eloquently you have mentioned the strategies and the way the CMA brand could be placed, how the practitioners as well as professionals and industries could actually place themselves and help organizations ethically to strategize and take the standard and level of the country companies to the next level. It has been really great, sir. And
Thank you.
from on behalf of the Management Accounting Committee of the Institute of Cost Accountants of India, and on behalf of the chairman, Rachappa Gunjali sir, I take the honor to thank you and we are really grateful, sir. And we hope for our future programs also. You may kindly share your knowledge and views and present us for the support and help and benefit of all attending members.
Pleasure is
Thank you
mine,
so
sir.
much, sir.
Thank you.